So today's video actually came in from a viewer and he was asking me to take a look at Nvidia, was asking me for a 10K. Now I did make the executive decision and we're going to go over the latest 10Q, the quarterly report from Nvidia. If you like what you see here, hit the subscribe button, hit that like button, and leave me a comment down below and I'll try to answer your questions. So let's jump right into it. So I want to first show you how the company name and IR for investor relation. You can go ahead and come to their corporate website, and every company does it a little bit differently. So if you find another site that allows you to access this quicker, no problem. There's typically something called financial info. And here you see that they have press releases. They have the audio webcasts of their investor calls. They have some CFO commentary, which is kind of interesting. They have a quarterly revenue trend, which kind of shows you their revenue trending over different periods of time. And then here we get down to our Form 10Q and 10Ks. Typically, the 10K would probably be that Q4 report. Here, what we're going to look at is actually this Q2 report right here. And so here it is brought up for the sake of time. First page states the company name, their address, not too far from me actually. And probably the most interesting thing is it shows you that number of shares outstanding here is this 609 million. This is a number you can find buried in the report as well. Not necessarily buried, but it's also in the report as well. But here it is right at the top, just in case you're looking for that. Table of contents is going to take you to where you need to go. If you want to look at the legal proceedings or something like that, it's all found for you there. I noticed they had their Twitters and their Facebooks and LinkedIn and all that. If you want to follow the company, that is there as well. What I love about these quarterly documents, it's all about the financials, baby. It starts right off. Every company leads typically with a little bit different documents. Oftentimes it's a balance sheet. Here we see it's a statement of income. So just make sure you always kind of know what you're looking at here. Again, our terms are in millions here, so we're adding 6 zeros to these numbers. So a 2,579, this is actually 2.5 billion with a B. So something to keep in mind as you're looking at companies of all different sizes. The other thing I want to analyze is the term. What I love about these is they're giving us a 3-month window here. So from July, this is 3 months ended in 2018. This is 3 months ended in 2019. So it's giving you a 3-month view year over year. This is giving us a 6-month view. So the reason why this could be important is maybe there's something that happened in the quarter over the last 3 months that's important, and it'll give you kind of a view here. Maybe something's happened over the 6 month. I mean, a little bit longer trend is giving it to you here. So let's just jump right into it. Revenue, they're giving you a top line. So we have, notice revenue trending down over at Nvidia. So that's kind of interesting. And okay, that's for the quarter, but we also see that it's also trending down for the 6-month period as well. Actually, a fairly considerable drop. So that's something you want to keep in mind. The other thing, almost as important as that, is how are the gross margins, gross profit or gross margin kind of holding up? Typically, when you see this drop in revenue, you'd also, honestly like to see the cost of revenue drop at kind of a similar percentage. Here, we see it's actually kind of flat, and here also kind of flat. So Nvidia's having their revenue drop, and their cost to drive this revenue, a lower amount of revenue, is actually dropping. It's not kind of following in line as well. So kind of an interesting trend to keep an eye on. Obviously, if this trend keeps up, definitely not going to be good for Nvidia investors. Now we get into operating expenses. So this is expenses over and above kind of the cost of driving this revenue here. And we have research and development. So we see, look at this, research and development driving up. Now, if you're a long-term investor, you have belief in Nvidia, them investing heavily into research and development over the next 6 months, 12 months is a good thing. Probably means new products, new innovations, new revenue streams, things like that. If you're not sure about Nvidia, this cost rising as revenue is dropping might be a bad thing. We got sales, general, and administration. I often like to see this in line, and here it relatively is, especially with revenue dropping. Are we paying our sales staff the same amount for lower revenue? This general administration can be all kinds of stuff from desks to, vacations and things like that. So we want to see this stay in line, especially with younger companies, especially companies that are not making money. So we've got a total operating expense. So we have our kind of a gross revenue here, taken out from, our total operating expenses here. We start rolling down to this net income actually here. Now, the reason why I kind of skipped this part is only because all this is not really operating income. So interest income, this is just money that they're earning from selling securities, or kind of, just like you earn interest in a bank account, Nvidia is doing the same thing on a little bit larger scale with their cash. Interest expense, this might be term loans. For you, it might be credit card interest. That's how you want to think about this. And then other revenue is just very minor. Again, this is $1 million, but in the grand scheme of things, not a huge amount of money. So here's other income. So here's operating. This is from selling chips and operating the business. This is from other stuff, that can come and go. They also come in here and account for income tax. So this is tax they probably haven't paid. I'm going to assume this is probably not tax that they paid yet, but they're going to, or this is what is going to come off the balance sheet at some point, or the operating statement here, in terms of being paid. We get down to a number I love and love to look at almost immediately: net income. So $500 million. $550 million in net income for the quarter. Again, this is 3 months. Notice last year was $1.1 billion. So cut in half, basically. Net income basically cut in half. And if we look again over the is just a quarterly trend? No. Here's the 6-month trend. It was $2.3 billion. Now it's under $1 billion. So again, if this trend continues, this number was more than cut in half. This number gets cut in half. Okay, eventually we start getting down to fairly low numbers. So it's something Nvidia investors certainly would want to keep a look at. We get down to a net income per share. Again, we take that, we had that 609 million share count up here. Okay, I told you can find it. Here is basic shares. I typically look at the diluted number just because it gives you kind of a fuller picture. And here, again, it's 1 cent difference or a couple cents difference here. But look at this. Earnings, again, have been cut in half. Now, one thing that you keep in mind with these per share numbers, if the company is buying back stock, it can actually lower the net income. So this net income can be lower, but since this earning per share is earnings divided by number of shares, if a company were to reduce the share count, it can make earning per share look like it's not decelerating as quick as net income. So it's just something you want to keep in mind when you're looking at companies that have big buybacks or have been doing big buybacks. And the reverse would be if they're increasing this share count. They, as we see, Nvidia is very steady in terms of their share count. But if they were to increase this rapidly, as some like younger companies, newer companies tend to do, this earning per share count would obviously go down quite a bit. Even if revenues were increasing, earnings per share would be going down because the divisor is going up. Something you want to keep in mind. Here we go. We got a statement of comprehensive income here. This is something not super important, only because look at these numbers. Okay, again, this is in millions, but this is $1 million. Okay, this is a company that earned $500 million. A million here or there is basically a rounding error. Notice I say 550 million. I'm always rounding off numbers on here because this last million or two is not going to really make a difference. So when you see a chart like this, not that it's not important, but look, it's taking off numbers that are, we're going from 552 to 553, not a big deal. So keep moving on. Now we get to our balance sheet. I actually just posted a video how we talk about balance sheet. And if you watched it, it's assets on one side, typically the top, balanced off by liability on the other side. And it gets us down to a shareholder equity number, which you hope to be positive in most situations. So here we go. Cash and cash equivalents. Notice, look how much it went up. Okay, look. So, but again, if you watch the videos, you understand, well, where did this company actually made less money than it did last year? It only made $500 million. How'd they increase in cash by over, what is that, $6 billion? Well, look at here. Look at here, guys. Look at marketable securities. This is like treasuries and government debt and things like that typically. Well, it went from 6.6 billion down to 1.3. Other thing you want to keep in mind, we're dealing with different terms here, or different like time frame here. We've got January to July, so it's kind of giving us a 6-month view. So this is again something you want to keep in mind. That we're not looking at a 3-month view on this balance sheet. We're looking at kind of a complete kind of year-to-date view in terms of Nvidia's time frame here. So yes, cash, straight cash homie in the bank went up like by billions of dollars, but notice it came from here. So they sold these securities and it went into cash. So that's something you can follow. Accounts receivable, this is money people owe Nvidia. That's in line and that's totally understandable. Inventory, you actually like to see this in line with revenues trending down. It might be that Nvidia's at the end of a product cycle. They're introducing new products, kind of like a new PlayStation comes out or a new iPhone comes out. You'd like to see the company wind down kind of that old inventory and we get into new inventory, and maybe that's what Nvidia is trying to do here. We've got prepaid expenses. Again, this is a relatively low number, so it's no big deal. Total current assets here actually trended up for the quarter again, or for the year, in a year where they had net income decline by over 50%. So they're holding on to these assets while running operations essentially through money that's generated by sales. Property and equipment, relatively the same. Operating leases, looks like they picked up a new one. Goodwill, the same. Everything else, all things being equal, fairly flat quarter, flat year so far from an asset perspective. Now we come down to the liabilities. What I like to do is just look at this number. Okay, it barely changed. It's like a $500 million change. There's not, and it looks like it, a lot of it maybe is from that. So it looks like they picked up maybe a new lease on a building or something like that, or had to, do new terms or something like that. And so that's what I'm seeing there. You have a little bit of long-term debt here. Looks like they barely paid, or it looks like it ticked up just a little bit. But nothing super alarming when you have seven. Again, this is about $8.5 billion in cash, so not too bad to have roughly $2 billion in this term debt. Then we get down to some shareholder equity here. Again, relatively flat, relatively the same. So nothing to be super, draw a bunch of interest there. Now we've got a statement of shareholder equity. It's kind of taking this number here and kind of dissecting it a little bit more. You got the 609 million total share count that we saw on page 1 there. Again, it's walking you through these, but these numbers are so small. It's something I'm not going to really cover here because it doesn't really apply to most companies, actually, I look at. Again, more statements of shareholder equity. This is for 6 months. They're telling you the term up here. This is probably a 3-month view. Yeah, this is a 3-month view. This is a 6-month view. Nothing in here really jumps out at me, so we'll keep moving on. We've got a condensed statement of cash flow. As Kevin O'Leary says, this is how cash flows through the business. So what it does, cash flow statement always starts off with a net income number. Again, we got the net income number all the way on the first page of this document. So here's our net income. Again, we look at our terms for 6 months ended. We were at 2.3 billion last year. Now we're down under $1 billion. So Nvidia is shrinking on the net income side. Now, it's going to show you look at this. They're still paying each other. Stock-based compensation. Okay, our net income got cut in half, but look at this. We're still paying ourselves over in Nvidia. So that could be a problem after a while. Not saying it is here in this case, but for some companies might be a problem that they're still diming themselves out this amount of money when net income slid by over 50%. So we got depreciation and amortization. Again, some of this stuff is not cash, stock-based compensation. As a shareholder, it's it's very valuable. The shares of the company are very valuable because that's what you own. But this is not necessarily cash. That's why you sometimes see adjusted numbers put in press releases and things like that. Uh, Depreciation, amortization, not necessarily cash. Deferred income taxes. Again, this is tax that they may or may not have to pay sometimes, depending on how things go the rest of the year. Uh, Changes in assets and liabilities. We have accounts receivables. We have inventories here. We see, kind of a change in this is changes in it. So it's kind of the inventory grow. This is where inventory kind of contracted a little bit. And we get down to another net cash provided by operating activities. I like this number. Okay, I really like this number because if you're trying to figure out, like if you have a business and you're like, how much money did just the business make? How much cash did it generate? Here it is telling you right here. Okay, last year 2.3 billion, this year 1.6 billion when you kind of factor in a lot of this other stuff that doesn't necessarily go into like a statement of operations and things like that. Cash flows from investing activities. Okay, Nvidia is a chip maker. They're not an investment bank, but they have, again, we saw over $7 billion. So they're going to put this in maturities and marketable securities. This is sales of marketable securities. This is purchases of marketable securities. Purchase of property and equipment here. This is more business related. This is more just, I have $7 billion, I'm not using it, so I'm going to invest it in something that generates a return. So we see here some of the, look at the net cash provided or used look at last year. It was a negative $4 billion. That's because it came under this purchase, okay? So they had some cash. Nvidia had cash, so they bought all these marketable securities. Well, a year later, it looks like they basically sold these marketable securities, and that's why we have essentially a positive number here. And so, look, $5 billion, not bad. From, it sure beats zero or negative. Negative's kind of it's not necessarily a negative. This is not like $4 billion went away from the company. It just went from cash or something else to these marketable securities, essentially. The rest of these numbers, we've got some employee stock plan. We've got some more tax stuff. We've got repayments on a convertible note here that didn't apply to this current quarter. And we got net cash used in financing activities. So that gives you an idea to, what they're doing in terms of financing their money. Last year, this amount of money went out the door. This year, this. Net change in cash equivalents. So we notice a year ago for 6-month time frame, cash was actually down $3 billion. Now cash is actually going up. So that could be a good thing. It also could be a sign, hey, Nvidia's seeing its sales slip, so maybe they're trying to hoard a little bit of cash just in case there's some rainy weather. I'm not here to tell you that that's what's happening. It's just a conclusion you can draw as we work through this document. This is notes. So you want to read through these if you want more color. So their lease. So what did they do with their leases? Here's their fiscal year. We see they operate a 52 or 53 week year. It starts the last Sunday in January. That's why we had like a January 27th number up there. So the last Sunday in January is basically the end of essentially their fiscal year. Something that could, when you're comparing two companies together, this is something you could keep in mind. Maybe one company's Q3 is in January, another company's Q3 is in November. So it's just something you want to keep in mind. Make sure you're always comparing apples to apples. More notes in here. You can read through these for the sake of time. I'm not going to do that, but it does describe mergers here. We've got a new lease accounting. Maybe that's where some of that lease money kind of came. They account for it a little bit differently. Some lease obligations here. So this is showing you, they obviously have to have a building to make stuff and house employees. It's showing you each year what their obligation is. And it's giving you like a total, here. Again, this is in millions. It's not $55 or $55,000. That's $55 million. But again, for a company with a couple $1 billion, several $1 billion in the bank, certainly And they could literally pay off all their long-term leases through 2025, like right now. So it's not a big deal. Um, More lease obligations here. Supplemental cash flow information. They're showing you just a little bit more cash flow when you factor in these operating leases. Stock-based compensation. They're showing you here, what they're paying. What they're paying their executives in each like kind of branch of the company. So you have research and development. Here's their stock-based compensation. Here's the sales and general administration staff. This is what they're being awarded in stock-based compensation. So kind of an interesting number, honestly. More stock-based information here if you want to dig through that. That might have a separate video for something like that. Net income per share. Again, we kind of saw this on the first page, kind of the statement of operations. We've got a net income number here. Again, we've seen our terms here, and it kind of rolls us down to, we have our weighted share count, which has stayed relatively the same. That's why when revenue gets cut in half, essentially earning per share gets cut in half as well, because it's being divided by a number that's basically the same. So something you want to keep in mind. Income taxes, they'll talk about how this has changed over the last 12 months or so. It also talks, I think, about how they can pull money back. They used to have money, and you used to have to pay a penalty if you earned money overseas and then brought it back into the United States. You basically had to pay tax on that. Well, the new administration changed that rule, and it's helped companies like Nvidia and pretty much all international companies pull money back into the United States without paying taxes on it again, essentially. More marketable securities. Here it's giving you a color on these marketable securities. It's showing you here's a money market fund. Here's United States debt. So when the politicians are out there saying, oh, we hate these corporations are evil. Okay. Here's Nvidia, just one example, that hold $2.1 billion with a B of United States debt. But if you took this number, imagine if you took this number on hundreds, if not thousands of public companies, how big this number would be. Corporations are large holders of United States debt. And if you think these people are evil and they stop buying your debt, some bad things can happen in those markets, but that's kind of a tangent. We'll keep rolling. We have corporate debt securities. It's giving you a breakdown of these, just in case, if the United States looks like it's about to go bankrupt or belly up, well, having $2.1 billion of their debt might not be a good thing. But in this case, as of recording this video, not a super fear. So we see different terms here. So here is 2019. This is July, and this is giving you it in January. So you can kind of compare the two if you need to. Kind of see how the money flows through this. Fair value of financial assets and liabilities. It's giving you, I honestly, I don't know what this means. I'm sure you can dig in here and tell, but I think it's just giving you an idea of how they fairly value it in terms of maybe some risk that might be happening with some of this. Liabilities, look, it's showing you look at this interest rate. Look at this interest rate. Tell you what, I bought a house not too long ago, and my interest rate wasn't quite, it was close to this, but not quite that good. So a company being able to borrow money, imagine if your credit card interest was that. And I'm sure a lot of you have bought homes near this, and you've seen the power of that. Amortizable intangible assets. So it's showing you these patents and asset-related intangibles. So when they acquire a company, some of it goes into an intangible asset, and it's showing you, how this gets amortized and basically written down over the years, because patents get less valuable more often than not, and then intangible assets also become less valuable. So it's showing you that amortization there. I love this. Not necessarily for Nvidia, but for some other, maybe a fashion company, maybe a company trying to compete with Apple, or trying to come out with a new product that's unproven. Inventory is an interesting thing because it's showing you raw materials, showing you work in progress. Work in progress is I believe, some raw materials put together. It's not quite a finished good. So imagine it's maybe like an iPhone without the screen, an iPhone without the battery. Something like that is a work in progress, whereas a finished iPhone is boxed up, ready to be sent to the United States or sent to the AT&T store or whatever to be purchased. Now, my point here is if the company has a lot more raw materials, might not be a bad thing. If these finished goods don't sell, well, guess what? This number, 639 million, it's not even worth close to this. What happens to clearance clothing or iPhone 6s and 5s and the previous generation of any model? It's not worth as much as a brand new model or the brand spanking new one. So this finished goods number, not always necessarily a good thing, whereas raw materials, look, tungsten is tungsten, plastic is plastic. Maybe not be able to get all your money back, but it's not going to sell as steeply as a discount as something like this. Again, with Nvidia, $1.2 billion worth of inventory, not something I'm worried about. But if you're looking at a company with, $1 million in cash and they have $1.2 billion in inventory, or even $1.2 million in inventory, I'd be dissecting this number, making sure they get full value for this and full value for this, because if this number doesn't rise, then, if they don't get full value for this in terms of sales, then some bad things can be coming. So I love this inventory number. It's, again, only for companies that it applies to. A company like Facebook or something like that, not necessarily going to have this on their balance sheet, but a company like Nvidia that's manufacturing something, a Nike, Apple computer, companies like that typically will have this, and I really like that, especially for companies where you're not really sure if this finished goods is going to sell, or what the sell-through rate is on that going to be. How deep is the company in there? So interesting stuff there. Accrued and other current liabilities, more liabilities. So we got taxes on here, we got deferred revenue, which not necessarily, it tells you what it is here. And then you've got customer program accruals. I don't know. Maybe that's money people are on like a subscription. I don't know. Coupon and interest and debt obligations. So this is how much they have to pay a bank or something like that. So interesting numbers, not huge numbers again here in the grand scheme of things. Now we got come down to more notes to the financial statements. We've got income tax. Again, it's giving you a little bit more color into their long-term liabilities. You have tax, you have deferred revenue, you have licenses, you have employee benefits, something interesting maybe for a GM or something like that. Maybe some companies might this might be a little high. Deferred rent, things like that. Again, just giving you more look deeper into some of this stuff. We got debt. Look at this, 2.2% debt. Wouldn't you love to open up your credit card statement and see 2.2%, 3.2%? Just unbelievable how cheaply companies have borrowed money. Again, when you factor in inflation is roughly 2%, you can almost minus that money from here. So $1 billion today, to give you an idea how, just in case you don't know how inflation works or how to think of it in this sense, okay, $1 billion today is worth 2% less, or I guess that would be what, $2 million, I think, is basically $2 million less next year. So, and you can think about it, the cost of gas goes up. Now, gas might not be a good thing, but maybe like a candy bar. When I was a kid, candy bars were 50 cents. Now they're $1.50. Okay, that's inflation right there. And everything, we see it with home prices and everything. So $1 billion today, not worth nearly as much. It's worth basically 2% less every year. Well, that's why you factor in, well, they borrowed the money at 2%. Well, guess what? Inflation's about 2%. This money, guys, is effectively free. Effectively free. When you see companies borrowing for this amount of money, it's it's not free money in the literal sense, but it's as close to free money as possible. This is why people really jump into the housing market. Not to get onto a real long tangent here, but people jump into the housing market because you can buy an appreciating asset with basically free money. This is why the rich get richer and the poor, who tend to avoid the credit markets or can't access them, stay poor. because they can't borrow money at 3%. They have like a payday loan guy trying to borrow it, lend it to them at 30. Just something to keep in mind. Here are when the notes are due. But guys, when you're borrowing money at 2%, trust me, there's no hurry in paying that money off because it's virtually free. Unbelievable. Unbelievable when you see that. Litigation, if you're a lawyer, if you really are into the law, I typically don't pay I don't want to say I don't pay too much attention to this stuff because every company with billions of dollars is going to get sued. Okay. And will they lose a little bit of money, lose a lawsuit here and there? Yeah. But really, where the money is going to go is into lawyer pockets there. So that's really what that's all about. More shareholder equity. They've got a little, actually, there's no preferred stock. So that's kind of interesting. Common stock, they can, list up to 2 billion shares. This is interesting. Remember, they've issued about 600 million shares. They've been authorized to issue 2 billion. Okay, so you as a shareholder, wouldn't necessarily want them to do that unless they're raising that money for a very specific reason. This is segment information. I kind of skipped by it there, but that's a segment information here. This is more notes to the consolidated balance sheet. Again, we start off with a revenue number, and we're kind of working through basically kind of an operating income here. And it's giving you a 3-month view. Oh, this is cool. So it's telling you here's GPU, which is a part of a computer. Here's the Tegra processor, and here's all others. So notice, look at this GPU. The GPU business is huge. Okay, maybe what you can do here is look at kind of the revenue trend. So this is 3 months through July. This is 3 months through 2018. So the revenue trend fairly flat here, fairly flat here as well. And we're seeing other revenue basically not really come into anything at all. Looks like maybe other investments that they're doing. So interesting here that you see actually that revenue line is, remember we saw that their total revenue after you look at the, everything was going flat, but here we see sales of these individual units not super, it's not that bad. This is actually the Tegra processors are actually trending up. So this is why maybe the stock hasn't fallen, completely to pieces. And then now we're getting a 6-month view of what we just saw there. So 6-month view of the GPU sales, and we're getting a 6-month view of these Tegra processor sales. Very cool. Again, something that you might trend to. Look at this Tegra. It was at 900 and now it's at 673. So that's actually trended down. That's accelerated down, and this is obviously down as well for 6 months. Again, something that's interesting. Can you trade on this in the short term? Sure. If you're a long-term investor, maybe not something that you factor in, but it's not. Again, it's just 3 months. It's just 6 months. More stock-based compensation, some other stuff. This is the all other category. They're basically showing you this all other category up here. It's showing you what is comprised of that here. And it looks like stock-based compensation, acquisition-related cost, legal settlements. When I talked about lawyers getting rich, look, for 3 months, they paid $2 million to lawyers. Look, for 6 months, $13 million. Okay, is that a big number to Nvidia? No, but this is why lawyers love suing companies, because $13 million to a law firm is a lot of money. Okay, maybe some of the big ones it might not be, but to almost all law firms, $13 million is a lot of money. That can basically be, what you do for the whole year. So yeah, for 6 months, this is why lawyers prey on these corporations, because $13 million is a rounding error for a company like Nvidia, or again, for a lawyer, very, very, very valuable. This is cool. It's giving us revenue for the different regions. So a multinational company, you might say, well, how's Asia Pacific doing? How's Asia Pacific holding up? How's Taiwan holding up? How's China? Ooh, look at China. Look at China for 3 months. Boy, I think they don't like Trump, and so maybe they're not buying the GPUs from Nvidia. Europe actually going up for 3 months. Look at the United States, way down. And then we see, look at the United States here. But the United States, again, a minor part of this business. Look, Asia Pacific, Taiwan, China is is a huge part of Nvidia. Look, for total revenue is 4.8 billion, and look at this: one, two, three, call it four, and some change. Well, not quite four, but basically three and a half is all almost this whole number is China, Taiwan, and Asia Pacific. So, if you invest in Nvidia, you're kind of investing right here because this is where not saying the United States or Europe, Europe's actually growing a little bit, but boy, it would have to double to get to anywhere where the kind of the Asia Pacific, China, Taiwan. So that's something to keep in mind if you think these countries are coming up and they're going to keep this acceleration. Then yeah, this is a good business. If you think these countries are going to have problems maintaining this kind of investment, then it's something that you want to keep an eye on. Again, more why I love the Qs, okay, because here's revenue and they're showing you here's gaming. So gaming's down. Professional visualization is actually up, kind of flat actually. We'll call it data center is roughly flat. Automotive trending up a little bit, but again, a very small part of the company. OEM and other actually trended down quite a bit, but again, it's such a small part of the company. But again, showing you, look, it's a gaming company. Nvidia, just if somebody asks you what's Nvidia all about, you can look right here and say it's all about Asia Pacific, Taiwan, and China because that makes up the bulk of their revenue. And they're basically a gaming and data center company because that's where most of these revenues are derived from. Now, could automotive come up one day? Could professional visualization keep going up? Sure. And maybe the gross margins on these are really good. But look at where all the revenue is coming from. So if you dig deeper into Nvidia, you'd want to study gaming, data center, and kind of the Asia Pacific or kind of the Asia region here. So very interesting, beautiful, beautiful visualization there of the company. And we get down here a little bit, couple more things here. Hang with me. You guys are doing a great job. Here we get through, is this what this is? This is recent developments. Okay. So we have a revenue line here. Again, we have we have a quarter. This is what it's kind of showing you. Quarter over quarter change. So quarter over quarter, our revenue, it's showing that it ticked up. This is kind of weird. So we have July here, we have April here, and we have July from a year ago here. And it's showing you quarter over quarter change, but then year over year, we've trended down actually. So quarter over quarter, we trended up, but year over year, we trended down. So I hope you followed that. I'll show you again. Gross margin. So gross margin for the quarter, gross margin last quarter, gross margin a year ago. So gross margin increased, as we see here, 140 bips. So it went from 58.4 to 59.8. That's 140 bips. Okay, but look, it went down 350 bips. That's what it's showing you there. So operating expenses, again, this quarter, last quarter, a year ago. Okay, so operating expenses went up and they went up here. Okay, income from operations, last quarter, this quarter, last year. Notice they went up this quarter, but they're down 50% from last year. Same thing for net income. This quarter, last quarter, a year ago, up for the quarter from a quarter ago, but down from a year ago. And we get to a net income line there as well. Pretty cool. GPU's business, this is super cool. If you're not sure about Nvidia, and, look, I'm not a super expert on what they do, but here they're going to talk to you about all this stuff. They're talking to you about the data center. They're talking to you about gaming. They're giving you a little bit more color on this. Look, they actually go into certain products that they're making. And so, look, notebook GPUs, it's telling you different stuff in here. So as you dissect this company further and further, this stuff's going to be in here. Look, they talk about their GPU business. Look at this. Don't go to a blog. Before you go to a blog or some talking head, come here and read this first and then start digging into it yourself. Look at GeForce GTX. Look at these products. What are people saying about them? What's the demand for them? What's the competition for this? This is what you can use all this information for. Here's their Tegra processor business. It's showing you here. Okay, awesome stuff. Come down, more results from operation. This is essentially the very first page verse financial document we went over, but here it's talking to you about in percentages. So here revenue is 100%. Okay, you can't, they're counting revenue as 100%. Cost of revenue is 40.2%. That gets you to this gross margin number that we saw right up here. Okay, we saw this gross margin number here. This is where they're basically getting it. So gross profit 59.8%. And again, you can compare it for 3 months a year ago, and you can do the 6-month trend. Again, margins are trending down. Revenues are trending down at Nvidia. This is research and development as a percentage of revenue. So revenues here is at 100%. 60% is left after you take out this. Now you take out research and development, which is 27% of this. Again, last quarter was 18, so research and development costs went up. We saw that on the first page. Research and development costs were 17% of revenue 6 months ago, or a year ago for a 6-month period, and now they're 28%. So they must be working on something over there, at least you hope so, in Nvidia. Sales and general administration, you like to see this stay about in this range, okay? Especially when they're trending down in revenue, okay? The sales staff does not deserve more money when revenue is going down. At least that's my opinion. Total operating expenses, again, 37% of this revenue number. And then we get, we add in some of these numbers and we get to a net income. This is kind of like a net margin. So off 100% of revenue, 21% is profit. So for every dollar Nvidia makes, they make 21 cents of revenue. That's another way to think about that. Okay? And if this number is negative, then they're losing money. But it's positive. Again, for every dollar that Nvidia earns, they're earning 21% or 21 cents on that. Or for every million, they're earning, what is that, 210,000 or something like that. So revenue, again, we see we're getting the GPU revenue. We're getting a change in value. So it went down a little bit. It's showing you it went down actually 21%. That's a lot. And showing you the 6-month change over here. So again, you could have calculated all these numbers yourself by reading previous financial documents. Here, the company is giving it to you right here. Now, they're bearing it on page 26 of 38, but it is what it is. Talking you more about the GPU business. Talking you more about the processor business. Again, I'm going to skip over this, but it's something I would read if you're really interested in this company. Gross margins, going to give you more color on that, okay? The fact that gross margin is trended down, it'll probably give you, look, they're talking about write-offs and things like that. That could have affected gross margins, okay? This is what a sophisticated investor does. They don't just say, "Oh, gross margins gone down. I'm going to short the company. Gross margins are down. I'm going to sell the company." Or gross margins are up. I'm going to buy. No. Why did gross margins go down? Okay? Is it something due to inventory provisions? Is it due to something or write-downs and things like that? That's what you want to really drive your decision making off of. Operating expenses, again, it giving you this from a percentage view. So it went from R&D went from 581 to 704. That's a 21% change. And again, I think you guys know what's going on here, and we got the terms here, 3 and 6 months. Giving you more color here as well. Liquidity, again, showing you, again, guys, don't worry. We have $7 billion in cash. Okay. We, actually a little bit more than that. Basically 8.5. Again, last year was 7.4 billion. Sales went down, but that cash went up. Okay. For some companies, it might be that they did fundraising. They borrowed money. In the case of Nvidia, they generate, even after, again, we saw that they earn 21% for every dollar that they sell. And so some of that cash does still flow to the bottom line, even when sales are down. Liquidity, not a concern here, but some companies might tell you right here, yeah, we're in deep trouble. More talk about some of the debt and things like that. And guys, that's about it. The rest of this is kind of some boilerplate stuff and some corporate signing. So give yourself a pat on the back. You made it through another Q. Again, with the 10 Qs, this is all about financial documents. Notice we talked all about the financials here. The 10Ks tend to be a little bit more wordy and can be a very valuable research in your researching tools. But typically, I love to pull up the latest 10Q like we did here, go through the numbers, see what's happening with the company, and start making decisions if you want to buy the stock or not. Now, full disclosure, should have probably said this in the beginning. I own a couple shares of Nvidia, but it's no big deal to me or my portfolio or my family. I just want to throw that in there. Certainly not going to affect what I talked about on today's video. Thanks for tuning in. Hit that like button. If you made it this far, hit that like button. Hit that subscribe button. Guys, I'm doing this for free. Leave me a comment below, and I'll try to answer your questions. Thanks again. We'll see you guys.